In this video, we're going to dive into supply and demand, the one system that I've been using to trade since 2022 that's made over $250,000 so far. We're going to dive into every single confluence in detail so you know exactly what to do the next time you get on the chart. From what supply and demand is, fair value gaps, how to enter, the take profits, market structure, every single piece that you need to put everything together so you can start trading this in any session that you prefer. So get a pen and paper ready. Let's dive into what exactly is supply and demand in the first place. So supply and demand is when you have either too much of something or too little of something. A good example that I like to use is this iPhone 16 Pro Max. So this phone right here, if we had too much of this phone in the world, what's going to end up happening is the price is going to go down over time. But in like, let's say 50 years time, this phone is going to be a lot more rare. There won't be too many of it in circulation. So at that point, because there's too little of it, there's going to be a lot more demand for the phone. So when there's a lot more demand, price goes up because a lot of people want it. When there is too much of something, the price goes down because there's, everyone's kind of bidding against each other. Everyone's cutting down their prices. So that's a good way to picture what supply and demand is. How this translates to the charts is pretty much the exact same thing. When you're looking for a demand, price is going up. When you're looking for a supply, price is going down. So the first part to supply and demand is understanding market structure and where price is going. So we're going to hop onto the charts. Okay, right here, this is gold. For anyone who's new to trading, you can trade different pairs, but this is gold and this is the structure of gold back in 2023. I just chose a random date so we can actually see exactly what's going on at that period. We're going to remove these change of characters and stuff just so we can really understand exactly how price moves without it. I made this because now it's basically how I see price action. So I made this for me just to make my life a lot easier and quicker. However, I recommend you still know how to read price action by yourself without anything helping you. Right, so the first thing I like to do, if you are looking to get more than one-to-ones in terms of take profit, then you want to first of all make sure you're definitely trading market direction. But now what I like to do is I like to use the 1 hour time frame to help with that, because if you're trading alongside the 1 hour, you have a higher chance of getting those higher take profits. So on the 1 hour, we need to first determine where is price going. Overall, looking at this chart, price is just going sideways overall. But if we keep playing this through, we'll see that now we have a change of character on the 1 hour right here. Overall, we're still consolidating in the grand scheme of things, literally since April. However, at least we have this break of structure. We have this change of character right here. And what I can also see is down here, price has failed to break this low multiple times. So as of right now, I am thinking of looking for buys on the smaller time frame. So if we go down to the 5 minute and we want to determine where is price going, this is when we need to now start reading price action perfectly. So how would I go about doing that? So the first thing you will see is as price was moving upwards, you will see that we have a change of character here. Let me slow down. What is a change of character? When price is going in a particular direction like this, I would assume most of you guys know this, so I'm going to skip through this pretty quick. But if price is going in a particular direction, right now we're going high and high, and suddenly price decides to change direction right here, and we broke this low, this is a change of character. And then if price decides to continue to do this again, so we go up slightly and come back down, now we have a break of structure. So a break of structure is what happens after a change of character. A change of character is the first change of direction. So looking at this, we can see price has been going lower, and then suddenly we broke this high right here. So right here, we have a change of character. And then if price continues to do this, now you'll see we have a break of structure. In this case, now that we've had a break of structure, this is now a good period to start looking for buys, because you will see that price is slowly pushing up. We failed to break and close above this low in the 1 hour. However, if you go into the 5 minute, you will see that we have broken above this high. So this is the market structure part of things. It's very, very important, because for you to even look at supply and demand in the first place, you need to make sure you're doing it in the direction that price is going in. So right here that we're breaking highs, in this instance, I would be looking for a demand. So that takes us to what exactly is supply and demand on the chart. Remember how I mentioned that if there is little of something, generally there'll be a higher demand for it. So in this case, how does this translate on the chart? You want to look at it this way. Price is currently going up because there's a lot of demand for gold, right? And how do you know this? When you have an aggressive push, in this case, where you have blue candle, where you have multiple blue candles like this. So you'll see right here, we had a downwards movement, and suddenly we had blue candle, blue candle, blue candle, all pushing to the upside. For you, it might be green candle. For me, it's just blue because I changed the color, but it's the same thing. This is what you call a demand. When you have aggressive push in one direction, and then the supply will be the opposite when you have an aggressive push to the downside. But I'll show you a supply example shortly. In this case, when we have an aggressive push to the upside, the demand area starts from the bearish candle before the push to the upside. So it starts from this black candle. So the candle that went in the opposite direction before you started getting the push to the upside. In the supply example, you will see this candle right here. We had a blue candle to the upside, and then we had multiple black candles to the downside. That's a supply. So a supply is when you have a blue candle and then multiple blacks. A demand is when you have a black, so downwards movement, and then price pushes up. So with you knowing that, you might say, is this also a demand? Is this also a demand? Technically, yes. Technically, yes. We are looking at a smaller time frame. However, it still technically is one. But there will be a point where I'm going to show you exactly what separates a high probability demand and a low probability demand. So yes, there's supply and demands, but there's some that are better than others. Not all of them are equal. So in this case, this is one. You can even see price kind of came in and reacted. However, this is not the best demand that you want to look for. This is what I prefer. This I prefer because of a different confluence. And that confluence is known as fair value gap. This is one of the most important confluences that's going to determine and help you separate the different supply and demands that you see on the chart. So what is fair value gap? This one is tricky to explain. I have made a dedicated video on fair value gap, so you want to watch that video after this so you can fully understand what fair value gap is. But fair value gap in this case is when you have multiple blue candles like this, where you have 1, 2, 3. You need 3 candles to determine what a fair value gap is. In between those 3, you will see that you have bodies and wicks. So the body of the candle and the wicks. Right here, we have this candle right here, and you can see that we closed above here. That's the top of the wick of that candle. The second candle is this blue candle. So the blue candle in the middle is the subject. And then you have the third candle, which is this third candle right here, which is also blue. It doesn't all have to be the same color. However, the middle one is always the subject. I'm going to show you guys another example shortly. In this instance, this is what we have here. So the fair value gap, what that term basically means is where price hasn't filled. So as the price of gold increases, the value of gold has to be almost presented to every buyer at every single price. So every single number here, it has to be offered to them, basically. See it that way, right? So this push to the upside is almost like, because these wicks don't overlap, price has to return back there to offer that price again. It must do it. This is something that always happens. So fair value gap always has to be filled at some point. And I think data says that I think within 72 hours, most, maybe 80% or so, don't quote me, but I've heard it somewhere, that 80% or so gets filled within the first 72 hours, something along those lines. So why this is important is that it helps us to know that price is going to return back to a particular point, and then we can either look for continuation or whatever else that we do. In this case, we know that price aggressively pushed up and price is going to return here at some point. So this is what confirms a aggressive good demand zone, because price pushed up aggressively. Another example of what isn't a good one is that you will see here from this, we don't really have that aggressive push. So we have the black candle. How you draw your zones, by the way, you draw it from the black candle for demands. You draw it from the black candle all the way to the lowest of whatever's in front of it. All right, so this black candle, so the first bearish movement before the aggressive, multiple blue candles, you draw it from the start, so the top of the wick, all the way to the bottom of whatever's in front of it. And a supply example would be the blue candle to whatever is the highest in front of it. So you see that I'm drawing it all the way to the top of this black candle. I didn't draw it to the blue. I'm drawing the box all the way to the top of the black of it. So this is what you call a supply. This is how a demand is drawn. You can always come back to this video and watch it multiple times so you can fully understand this. So the fair value gap in this case, you can see right here that we don't have that aggressive push to the upside. Why? Because this black candle has come back to overlap. So there isn't really a aggressive push. We're missing the fair value gap that starts from this black candle all the way to the upside. But in this case, you will see that from this candle right here, we do have fair value gap all the way from here pushing all the way out. So this was an aggressive push. But here you can see the wicks have overlapped. We have wicks here, we have wicks here. Everything is basically overlapped. We do have this fair value gap inside the zone, but this is not a high probability one. This is not the best one that we want. We want ones where you have a black candle and an instant push to the upside, right? Because it means that price dropped a little bit and then buyers came in and started pushing to the upside. So this is what a fair value gap is. Remember, if it's still confusing, watch that dedicated video I've watched on fair value gap. You can always come back to this video as well. But this is what I want to see in this instance. So once you have your demand in this case, that is also a good probability, a high probability, you then want to draw it out like this. And at some point, I'm just waiting for price to come back to fill this. We don't know when, but you are waiting for price to come back to fill it. You will see that whilst we're waiting for this, we then had another demand. Again, we have this one here again. You'll see we had a black candle, multiple blue candles, and we also broke structure. But I'll get to that in a second. So far we've covered fair value gaps. We've covered what supply and demand is. We know how to draw the supply and demand zones. So now it's probably a good time to transition to structures, because once you understand structures fully, which we've touched on a little bit, but you need to really understand market structure. That's one I would say most of the students struggle with, for sure. They always struggle with market structure. So you want it to almost be as automated as possible, so it makes it easier. That's why I've made that indicator as well for those that do struggle, but I do believe that you want to know exactly how to read market structure first before you start using tools that will help you. However, if you do want to get the tool, then I'll probably leave a link in the description of this video for those who do want it. Okay, so in this case, you should be able to now see that we had a change of character here. We had a break of structure here. So let's draw this out properly. So we had a change of character here. We have a break of structure right here. By the way, for value break of structure, it needs to close above the previous. So we closed above here. And then now you will see that we kind of have a minor-ish break as well. Just a minor-ish. But right now we're having break of structures just kind of continuing, which is good. In this case, we can see we have another demand. So what I would want to do here is, okay, I know that we're looking for buys. I know price is pushing up, so I'll be looking for only demand zones. Price has tapped into this zone, and you can see that price is respecting this zone. This is very, very good, and this is what you want to see. Why is this important? Because you will see that overall the volume of the black candle starts to slow down. We can see price held in the zone. We can see a blue candle now, which means buyers are stepping in. And now this takes us to entry. But before we touch on entry, I'm going to do one more example of market structure, because again, this is what a lot of people struggle with. So we're just going to kind of head back to a random point in the chart, and we're just going to read the price action. Right? This is what you want to practice over and over, because it will help you a lot in terms of reading price action. So let's go to, this is like an easy example, right? If we're starting from here, right here, we can see initially, first thing is that we've had break of structures to the downside, right? We've been breaking to the downside. And now what's happened is price is now attempted to break this high. It's failed. Price pushes down again, did not break past this low. And then you can see we attempted again. And now we've broken this high right here. So the first thing we now have here is a change of character. Price kind of plays around a little bit. We have a minor again change of character right here. We broke a small low. We attempted to push up. We failed. We broke this low again. And now price starts to trickle up. And now you can see we've broken these highs once again. So now we have another change of character, right? So right here, price is kind of just playing around a little bit. Once we've had this change of character now, you will see that price now kind of continues to go up. So eventually price holds, we break this high, we have a break of structure, and then guess what? As you continue to push up and up, you just keep having break of structures as long as price fails to break to the low. Right here, we have another break of structure. If price went down below here, it would be a change of character. If price broke this low, it would have been a change of character. But so far, price keeps pushing up. In this case, we keep pushing up. So we just keep breaking highs. Price attempts to break this low. Well, it's not really a low, but price attempts to kind of, consolidate for a little bit. But overall, we still keep breaking highs because we definitely broke this high. So overall, you can see break of structure, sorry. Then we had a change of character, break of structure, break of structure, break of structure. This is important because you want to be looking for buys when price is pushing upwards, and you want to be looking for sells when price is pushing downwards. So it's very, very important that you're trading in the direction of where price is going. And for stronger confluence on this, you then want to make sure you're also trading in the direction of a higher time frame. I like to use the 1 hour. I don't like to do too much top-down analysis. It's not for me personally because it adds confusion. But I like to pair it with the 1 hour and then whatever smaller time frame I'm using. So now that we've covered those, just do more practice on market structure. It would help you a lot. If you're still confused, just literally do what I just did. Go to any time in the chart and just keep going through break of structures and try to just draw it so you can paint a good picture. And if you need more help on this, just join the community and then you can send the screenshots of what you have drawn and I'll be happy to help you. Okay, so this now takes us to entry, right? Because we have this demand right here that is cooking and waiting for us. Now, how do we enter? You enter by looking for something known as a break of candle. This is basically when price has come back into the zone, waited, it's slowed down, we have buyers coming in, and now we're waiting for a break of candle? A break of candle is extremely simple. This is when price just goes past a previous candle. What do I mean by this? You will see here that once price taps this demand zone, there's two things you can do. You can either look for your entry right now, or you can wait for the fair value gap to be filled in the zone. There's two ways. However, in this case, either way, price has filled the fair value gap inside the zone, which is great. So what we are now looking for is that break of candle. We just want price to break the previous candle. So we want price to go above this blue candle. So what we'll be looking for, we'll use our position tool, set our entry right here. The stop loss position is just below the candle. There's two stop loss models you can use, either below the candle or you can put it at the end of the zone. These are the two models that you can use, just so you know everything to do with supply and demand. And then some people can pick whichever one they prefer. Some prefer at the end of the zone because it gives them more confidence that the trade is invalid once price breaks the zone, which is what invalidation is. If you hear me ever say invalid zone, it's because price has broken through the zone without giving us a break of candle. And a break of candle is when price goes past the previous candle when we are looking for a setup, or when we're looking to take buys or sells. In this case, it's a buy, and price has not invalidated the zone. So you can see right here, we broke past this candle. Now, what take profit would you be looking for? I highly recommend everyone starts from looking for one-to-ones. It's extremely important because trading is a confidence game. Once you're extremely confident, it helps you significantly to be a better trader. Eventually, you can now start to add other confluences and remove things and, adjust things basically. So you can start to look for things like 1-3s and whatever else that might suit you and help your psychology, because everyone should trade according to their psychology and what they can handle. Some people can't stand 1-1s because they might feel like they're winning and then losing and then winning and losing. Some people love 1-1s because you have a higher win rate and you win very frequently. But some people will struggle 1-1s because maybe if you go on a losing streak, it's a lot harder to come out of because you're taking one out every single time. So there's pros and cons to both. However, start with 1-1s so you get confident, you understand exactly your trading model, you build up, the routine, and then eventually you can start to find different confluences and data that backs it and helps you to get more. And the best way I like to do it is by using Central Journal. So you can see in this case, right, looking at this data right here and best exits, you can see with 1-1s, it's telling me if I'm trading exactly how I am with all these confluences that I've added here and the time and everything else, I would have a 62% win rate. However, I would have a 40% win rate with 1-3s, but I'll make more money overall. In fact, with a 1-1, it's 72R or 72%. But with 1-3s, it's an extra like 30 plus or even 40 extra. So you can see how both are great. However, one can be significantly better. And then you can adjust, your break even, for example, if you start to implement break even and see exactly how much more you can make. So you can see how now we make even more because we save more money on losses, etc. So start with 1-1s and then eventually you can work your way up to adding more confluences and analyzing the data so you have what's best for you and your psychology. So in this instance, we are looking for just 1-1. Not sure if we're actually going to hit this. I have not taken a look at this trade, but in this case, you will see price keeps pushing up, and we just tapped 1-1. And in this case, bam, we'll leave. Take profit has been hit. Let's see what happens afterwards. So in this case, I played around for a little bit and then continued slightly up. And then I was kind of playing around. So you can see in this case, you could have gone for 1-1 or the max that it gave was 1.78. And then it went back and started playing around. So this will be a great trade that you could have taken. And you can see exactly how supply and demand works. The idea is price previously pushed up at one point, which is the demand. We're waiting for price to come back there and we are hoping that it's going to do the same thing again. And then once you kind of add all the different confluences, the times that you trade and everything else put together, that is when you start to build a strategy that works very, very well and that actually wins very frequently. So this is just one example. We're going to look at another example. All right, so now we're going to look at a supply example so you guys can understand how it works both ways. So the first thing we're going to do is determine the direction market is going in. You can see right here, price is consolidating over and over. We're just consolidating the entire time. But now we get a change of character just right here. Bam. So finally, change character. Some people would draw their change of character like this. Some would say after all of this consolidation is broken, this is a change of character. Both are correct. It's fine. However, this is the major change of character we had. So now price has played around again. And then now we have a break of structure right here. Cool. So we know the direction. Now what we want to do is, once we know that we're looking for shorts, we now want to wait for supply to form. In this case, we can see our supply zone has formed. So you should be able to identify that we have this supply zone right here, which was a blue candle to the upside. And then we had a sudden dump. Why is this a great setup? This is a fantastic setup because if you also look at where the fair value gap is, we have a fair value gap right from here all the way to down here that has not yet been filled. So this means that when it pushed aggressively to the downside, we also had fair value gaps formed right here that has not yet been filled. So now what are we waiting for? We're waiting for price to come all the way back up and fill this zone right here. It's also at 1250 at the moment, so this is great because now we're entering New York section, so there's going to be a lot more volume. So waiting for price to just tap back in. So you can see right here we had this candle right here smack the zone and instantly rejected. So there was a lot of sellers right here, lots and lots of sellers. Once we see that, what are we looking for next? So I'll be hoping that you guys took notes and you are now basically, you know, doing it in the same pace I am, and you're telling me exactly what's happening next. So in this case, we're waiting for a break of candle, right? So this candle pushed all the way down. Now we're waiting for entry. What do we look for? Break of candle. Once we fill the gap. So you can see everything right now, it's almost like a perfect setup. Now we're waiting to see if this candle gets broken. If it doesn't, we just keep waiting on the candle getting broken. Now we just keep waiting. As long as it doesn't get invalid, we keep waiting on the previous candle to get broken, right? In this case, what happens next? Price gives us the entry. We'll be looking for 1-to-1 in this case, and then we just keep letting price do its thing. So you can see instantly we had this massive candle right here at 130. So I would assume this maybe is news. But in this case, you can see how in this example, you probably could have eaten a lot more. So this is those examples where you could have grabbed, you know, a 1-to-3, 1-to-4. And according to your data, you want to backtest this and see just how much and how frequently this happens. That's how you know you can win more. However, in this case, we don't need to chase the entire move. We just need to get our 1-to-1 and we're happy, right? So we get our 1R, and this is a perfect example of what a supply would look like. I hope we do understand that. I hope that's pretty straightforward. All right, so we're going to do one more example again and put everything together from start to finish so you guys can understand the full picture. Okay, so I'm going to show you an example of a trade that I actually took personally on my live account. So this is the first thing I'll do. I'm on the market right now. The time is currently 2 p.m. We know we have New York session. We know we have New York opening in literally 30 minutes. Right now, I'm looking at the 1 hour. What direction is the 1 hour going in? There is no doubt in my mind at all that I'm looking for buys today because price is just pushing and flying upwards. In fact, we just had a demand formed on the 1 hour itself. So price is pushing upwards, guaranteed. There's no ifs or buts about it. So based on market structure on the 1 hour, I'm guaranteeing and confident price is going to push upwards. So what am I looking for on the lower time frame? On the 5 minute, I am looking for buys. So I'll be waiting for demands basically. I'm looking for just demand zones, and I can see at this time price has pushed upwards significantly with a strong push. So I'll be waiting for price to come back to the zone. If it doesn't, I just continue to wait. So price keeps pushing up, up, up. We get this black candle right here. So we've got a little retracement and then price is pushing up again. We get candle number 1, candle number 2, and then the third candle, if it doesn't fill this gap right here, we now have a continuation. So we have what I like to call a break of structure continuation, right? Because we broke structure here, however, it's just continuing. We haven't really retraced again and broken structure as in formed a kind of break of another structure, because this is just a small retracement. However, we still have this continuation right here. So I'll be waiting for price to come back in. You can see just immediately, in fact, price has tapped the zone, correct? Yes. It's important that you draw this box accurately, by the way. Very, very accurate. It's very, very important. You can't, you know, make sure it's not like this when the demand clearly starts from here, because you will lose some money by doing it that way. So I can actually see if I was to draw this accurately to the T, we just about tapped it. So in this instance, do we get an entry? We're still waiting for an entry. So initially you'd have been looking for buys at the top of here. Stop loss would have been down here, but because we didn't get the break of candle, price has gone back into the zone. So now my entry, I'll be looking for an entry right here. My stop loss would have been down here, and in this instance we do get the entry. All right, so what would we be looking for? Like I said, you'll be looking for a 1-to-1 to begin with. Once you have all your confluences and everything and you're more confident, then you can look for a higher TP depending on your psychology. But in this case, about 5 minutes later, we've not yet hit take profit. So 10 minutes later, we've still not yet hit take profit. And then the next candle hits TP. So this is a great trade. You know, this is where you're able to make money incredibly quick. Literally in 10 minutes, you've hit take profit and bam. So this is the importance of trading with direction, because eventually price just keeps pushing upwards anyway, right? So trade with market direction, find your demand, find your supply, whichever one you're going for. Make sure your entry is ready. Make sure everything's calculated. Make sure you have your risk calculated. And then you take these trades literally day in, day out. It's a pretty simple, very, very simple model. Don't be confused. Don't confuse simplicity for there's no way it works, because trust me, the best traders trade a simple model. The more complicated it is, the more confused it would be. So you want something extremely simple. You want to make sure the confluences are very clear to see. There's no confusion. And this is pretty much the final recipe of what I've been doing since 2022, and it's made me a ton of money up till today. This is the same model I continue to trade. So what I want you to do now is something known as backtest. If you don't know what backtesting is, just check the channel. We made a video on backtesting, but I need you to go back in time. Pretty much what I've been doing so far. You go back in time, you find these trades, you mark up the demand, you mark up the supply, and then you continue to take trades like this. And then I need you to basically take note of your wins and losses, your win rate, and then build confidence that way. Let me know what the win rate is in the comments of this video after doing maybe 10 back tests, 50 if you can, 100 is even better. I like to recommend that people do about 1,000 or at least 500. But, you know, just keep pushing, do as many as you can, and let me know exactly what your win rate is or your profit is basically in the comments of this video afterwards. If you have any questions as well, feel free to ask in the comments of this video. I hope this was useful. Just leave a like if you did enjoy this video. And if you want to learn more on how you can increase your win rate, your profit factor, earn a lot more money, and trade with me, then there'll be a link for the community in the description of this video. Hop in and, you know, we can have fun with this. Thank you guys for watching, and I'll see you guys in the next one. Peace.